When is the stock market going to crash? This is a question I'm being asked more frequently now than I have in the past couple of years. We're in a bear market, so people do have a reason to be concerned, even though most people aren't actually that concerned. I say that because the data shows that when it comes to individual investors, they've been putting more money into the market this year than out of the market. In fact, the last month of July saw more money going into the stock market from individual investors since January, and that was a record month. So people aren't really, uh, when it comes to individual investors, liquidating or doing extreme moves with their money yet. But the market is down because a lot of insiders are selling, institutions are selling, and it's a bear market. But to show you what I mean, this is data on August the 30th, and the Dow is down like 300 points. And this is Fidelity order flow by customers. They provide this for free, showing you by rank 1 through 30 the stocks the most buys and sells, and the ratio there's buy orders and sell orders. You can see Tesla is number one with almost twice as many buys as sells. Bed Bath and Beyond, more buys and sells. Now there's an ultra short ETF. That's an ETF that bets against the stock market. It had more sells than buys. So people are getting out of these short ETFs in the market. And then the ultra long Nasdaq ETF, more buys than sells. Anyway, across the board, it's more buys than sells. And typically, bottoms come during a major correction or bear market when the masses are liquidating. It's not just institutions, it's not just insiders, but the masses themselves liquidate. And that's typically the bottom. But that also is what happens during a so called crash type event. Well, I don't think the market's about to crash. And I don't think the market's going to crash this year. But I do think that when this bear market comes to an end, it may seem like a crash to people. Let me explain why I'm saying that. There's a typical cycle to these things. And when it comes to, there's two ways to understand the cycle. One is pure price, which is what I call stage analysis. It's a relationship of the market to the 200-day moving average. In a bull market, a stage two bull market, the 200-day moving average tends to act as price support. The market will trade above it. It may test it once or twice a year, but it's support. In a bear market, the opposite happens. When you rally into it, you see the market unable to break through, and then it falls. That's what happened from 2000 to 2003. There were two or three rallies at 200-day moving average. It failed. In 2007 and 2009, there were two, and they both failed. There's one in the fall of 2007, and then the summer of 2008. They failed. And now we've seen a rally up to that 200-day moving average on this chart. It's where I've drawn the arrow, and it failed. We saw a similar rally in March, and it failed. So that's what's happening. The 200-day moving average is acting as resistance. This is the textbook technical definition of a bear market, and that's why I'm saying it's a bear market. It's not a prediction. It's what is actually happening. And the way I navigate the market is to align myself with what is happening in the way I'm invested and make changes when that overall trend looks like it's near an end or it's changed. It doesn't mean I'm gonna, expect to get out of exact tops or bottoms. But regardless, this is the price pattern. Now it's unusual to have two failed rallies to the 200-day moving average in the same year. That didn't happen in the last two major bear markets. You got to go back a long time to find a market, to find where that's happened in the United States stock market. So but there's another trend that happens with bear markets. That's the psychological trend. how the stock market investor is dealing with it and thinking about it. And I got to tell you, what we're seeing is that we are way early in the bear market, which is pretty surprising. It's not how I thought this bear market would play out. I thought a year ago, 2021, they were heading into a bear market. I wrote that, I did videos saying that. But when the bear market came, I thought it would be faster than what we're seeing, but it has not been. I no way expected two rallies up the 200 moving average because psychologically, the way these bear markets play out, they start with denial, people saying, this is not a bear market. It's don't worry, because they just gone through a mega top that made them convinced that they're in a new paradigm. The market can't fall because the Fed won't let it fall. We got new technology. The Fed just prints money and prints money. These kind of ideas. And never has been the business cycle been abolished or the stock market cycle. And then you get a decline. That first decline, though, historically leads to a counter trend rally in which people say, oh, everything's going back to normal. And what's crazy is that we've seen two of those rallies this year. We have seen two return to normal rallies, back up to the 200 moving average, and then they fail. What is remarkable, think about the narrative that you were told from June and July, especially in July. You were told, oh, the Fed is going to pivot, just like they have done since 2009. Whenever there's a correction, the Fed stops raising interest rates or they cut. When the market fell in 2020, they lowered rates to zero. In 2018, they were raising interest rates. Then when the market fell 20%, they stopped and started cutting within a few months. In 2010, the market fell 10% cut and they did QE. 2011, the market fell 10% QE. People are expecting Fed action. They were saying that in June and July. Pivot, pivot, pivot. The Fed will stop raising interest rates because the stock market fell over 20%. That's what the S&P did. But that narrative was what made people convince themselves who did that the rally that we saw was real. And then what happened, that pivot story wasn't real. We found that out Friday last week from the words of Jerome Powell himself on television at the Jackson Hole meeting. Although it must be said that Powell was saying that to the Wall Street Journal in multiple articles and interviews, quotes from him in it, and at a conference he held in Europe. It's just that the bull commentators on television and on YouTube and elsewhere, the so-called alternative financial media, but I got to tell you, there's really no difference between those people and what you see on CNBC. It is cheerleading of crypto, cheerleading of speculative stocks, grasping for these narratives to convince you that everything is going to return to normal. But the narrative was busted, and these people should have known better than to have spread it, but they did what they did. What's important, though, for going forward is to realize that this was the second return to normal rally. And bear markets then go through a decline that brings fear, eventually capitulation, despair. And it's that final ninth inning that you can see big selling that seems like a crash. For example, look at what the stock market did, not simply in the fall of 2008, but in the spring of 2009. In 2002, it fell almost every single day for the last 33 months of that bear market. That's how bear markets often end, complete capitulation and despair. We saw that in the gold market in the first quarter of 2016. So my answer is, when is a crash going to happen? It's not going to happen next week. It's not going to happen in October. It's going to happen like crashes usually happen. 2987 were the exceptions. Usually the so-called crashes are the final wave of selling in a bear market. I think it will probably play out like that next year, not this year, but next year. So that's my answer to people who are wondering, when is the stock market going to crash? Look, I talk about all sorts of topics in my videos. I talk about gold investing. I talk about the stock market, like I'm doing this video. I talk about economic policy, the Federal Reserve, talk about history and news and politics. If you want more videos about this sort of perspective of the big picture in the bear market, hit like so I'll know to make more videos about it. And if you're new to me on YouTube, hit the bell button or hit the subscribe button and then hit the bell next to it. And then YouTube will send you a video update alert as soon as my next video is up. And I'll be talking with you later.